if you get rescheduling, you clean up your back end and you're ahead of the, I guess, the race, so to speak. Does that allow you to guess uplist on a major exchange quicker than, say, competition, or does that have really anything to do with it? Hey everyone, thanks for checking in. Welcome to our latest TDR Cannabis exclusive. I am your host, Shad Dales. Hope you had a great weekend. We are full into earnings season, and one of the companies that actually follow closely and a thought leader within this space is back on our podcast, NewLake's Capital. Their CEO, Anthony Coniglio. The company trades on the OTC under the ticker symbol NLCP. How are you? Busy time of the year, I think, for the industry, which is great, right?
Yeah, a lot of news flow in the last couple of weeks and this week included. Busy time. Thanks for having me again, guys.
Yeah, always love having you on. Anthony Varrell, hope you had a good weekend as well. We are fully entrenched into earnings season. It's great to see. We look for a lot of stability, I think, and so far we're getting that. But when we dive into your latest earnings, you're one of the largest cannabis REITs within the industry, NewLake Capital Partners. We reported last week Q3 2023 financial results. Some of the key financial highlights for the third quarter included revenue amounting to $11.5 million, net income attributable to common stockholders totaling $6 million, funds from operations of $9.6 million, and adjusted funds from operations reaching $10.1 million. So how would you best describe the quarter, I guess, in terms of meeting your financial and operational objectives?
Yeah, I mean, it was in line with expectations. A couple of quarters ago, we put out guidance for adjusted funds from operations, which is our key metric that we look at for the business. Think of it as the free cash flow of the business. And so on $11.5 million of revenue, we had, as you said, $9.5 million of AFFO, 47 cents a share, in line with what we put out as projections. So we feel pretty good about delivering that. We had 47 cents a share of AFFO, and we paid out a quarterly dividend of 39 cents a share.
47%. Wow. Impressive.
No, 47 cents.
Oh, cents. Sorry, I thought you said percent. My apologies. Correction. One thing that actually grabbed my attention as well, and I think a lot of your investors that listen to the report, is NewLake Capital's decision to reaffirm, as you said, AFFO operations guidance for the full year 2023. I say that because what assumptions and market trends contribute to the projected increase of 4.1% over the same period in the prior year? Because that's a big number.
Yeah, well, remember, our business is all about acquiring properties from and for cannabis operators. And so we enter into these long-term leases with operators who are now our tenants, and we collect rent on a monthly basis. And so what's built into that is obviously everything that's happened through September 30th. But when we look at the quarter, when we look at what's happened in October, November now, what we expect to happen in December, really driven by the financial performance of the tenants. And we get quarterly financial statements, both for the guarantors, which are the parent companies, as well as the property level financials. And we look at the EBITDA coverages. I think we've talked about this before. It's where we look at the cash flow metrics of the properties. And from all that, we can have a pretty good sense for where we think that rental revenue is going to come in for. And that's why we affirmed our full year guidance.
Makes sense. Anthony, go ahead.
Anthony, I know we've talked about Rev Clinics as one of the assets in the portfolio. And I know that on the conference call, you assessed them coming back into good standing without having to re-tenant the actual facility. I mean, can you kind of walk us through the process and, I mean, where that asset is now and why you chose to actually, I guess, do the right thing and move forward with them versus like re-tenanting it, which we do see from several other REITs. That's usually not in their mandates, but I mean, it's not a bad business move from their end.
Yeah, I'd say all of the decisions that we make are really about what we call an NPV decision. What's the best net present value decision for our shareholders? And we always have the tool to evict a tenant if we don't think that they're going to provide the best net present value to our investors. And so when we looked at that situation, a company where the EBITDA coverage at that property had previously been numbers that we were very comfortable with. We looked at the fact they were bringing in new capital. We looked at the fact that they had some leading brands in the state as one of the largest wholesalers in the state. And we thought it made sense to come to an agreement with them, a combination of adjustments to rent, getting some warrants in the company, and a number of other features that we thought the best net present value was not evicting them and trying to backfill with a cannabis tenant or a non-cannabis tenant, but the best net present value was to execute that transaction and get that property producing revenue again for our shareholders.
Yeah. I would think the financial health of a lot of your tenants, knowing that you're working with a lot of tier ones, um, like what kind of questions are you being asked by your investor base that pertain to rescheduling? And I bring that up because, needless to say, the financial health is going to look very lucrative for a lot of these companies if we get imminent news from the DEA and rescheduling. But do you have a lot of investors that are reaching out and asking you this question right now?
Yes, because if you think about our business, again, we're acquiring properties from and for these cannabis operators and entering into 15-year leases. And so their credit capacity is critically important for us as a shareholder matter. Their ability to pay rent over that horizon is critically important to the value of our cash flows. And so
Right.
when you look at 280E relief and the ability to improve the cash flow profile of that tenant base, it's significant from a credit perspective. It allows in my opinion, it really is that first step for a lot of these cannabis operators to be able to restructure that balance sheet or re-equitize that balance sheet by paying down debt and using some of that new cash flow to reduce the liability side of the balance sheet.
Yeah.
Yeah, speaking of re-equitizing, I mean, we saw a big redemption last week in Trulieve that kind of like sent shockwaves around the sector.
Yeah.
I mean, what do you think about that? I mean, I know you're a finance background. I mean, when you look at it, you see they've got 200 million in cash. 130 is a big nut. They are producing free cash, but everyone's kind of like foreshadowing that like there could be an equity raise on the horizon, which I don't think they're going to do at these levels.
No, I don't think so
I
either.
think, but I also don't want to see them become Icarus and fly too close to the sun, drop that cash position to redeem the debt, and then they're in a precarious situation. So, I mean, what were your thoughts, I
Yeah,
guess, when you saw that headline?
my initial thought was, wow, lots of confidence in the free cash flow projection that they've provided.
Yeah,
I think a lot of these companies, right? Well, let me just go back to that, right? You wouldn't do that and put your business at risk, especially on the heels of the air announcement with
yeah,
the ability to get more time on debt. And so, I think if they wanted to extend that debt, listen, I'm not on the inside, obviously, but you would think that they'd be able to do that. But I think it was a
yeah,
really strong signal to say, we believe we're going to have enough free cash flow to bolster the balance sheet after paying down this debt.
Yeah.
And I think, the last point I'd say here is businesses in the cannabis space have survived to this point this year. It's been a really hard
yeah,
12 to 18 months for the industry. And there's a lot of scars there. And I think companies are in the mode right now of not taking on more risk. And so I've got to believe that Kim and the team over at Trulieve, which is a tenant, by the way, that they are looking at this and not looking at this as a way to take on new risk, but it was a way to
yeah,
de-risk the balance sheet. And if you think about the 20 million, I think it's roughly $20 million of cash flow they're going to save by not having to
yeah,
pay rent. Just think about that save over 1 year. That's $80 million. That's more than
Yeah.
half of what's due. So if you have some confidence in the ability to generate free cash flow from your business today, you could see where there would be growing confidence to be able to redeem those bonds.
yeah. I mean, she was confident. I mean, if anyone's going to do it, I would think it would be Trulieve. There's probably three names in the space that I'd be confident in and actually be able to generate that cash to cover it, and they'd be one of them. So it's definitely going to be interesting to see where that lands.
You got to think about what the long-term plan is there with a move like that, because it is a risky move. But, a
I mean,
question, go ahead.
she's got 190 million in debt. She's going to retire this year. That's talking the talk.
Like, what does that
That's
do?
a
And
tall
I'm just
task.
asking a question, but I don't know. But if you get rescheduling, you clean up your back end and you're ahead of the, I guess, the race, so to speak. Does that allow you to guess uplist on a major exchange quicker than, say, competition? Or does that have really anything to do with it?
Why would Anthony
I
take
don't
that one?
think it has. Yeah, I don't think it's the catalyst to get uplisted to an exchange. I don't think it's the balance sheet risk. I think it's still about the exchanges not wanting cannabis companies due to the federal classification of it. So I don't think it's that. But what I do think it does is I think it feeds into this re-equitization narrative. And so
Yeah,
just let me paint this picture for you. If you get a rescheduling to 3, this industry becomes more investable for many
Yeah.
investors because of 2 reasons. Number one is the federal government just made a statement about cannabis, and it just reaffirms, we in the industry, we all feel very confident of this march towards legalization. Those on the outside, they want to see a little bit more out of the federal government. I think a move to 3 could be the shot in the arm to get some people off the sidelines. Well, now they're looking, and now they're shopping and looking at companies. Who are they going to invest in? You'll see balance sheets improving. And I think that she's playing right into that
Mm-hmm.
increased level of interest because she's going to have a balance sheet that's going to look good relative to maybe what investors were expecting because she's now
Yeah.
paid down debt. She's improved her EBITDA and her free cash flow profile, which just further makes it more interesting. And I hope that as companies, if we get the Schedule 3 and stocks go up the way we would expect them to, people will use that higher stock price to issue some equity, further improving the balance sheet. I think it gets us into a positive feedback loop where then the incremental investor says, well, now I really want to take a look at this industry and this
Agreed.
company in particular.
Yeah.
Yeah.
So, I mean, you were on the record earlier this year. I think it was either Q1. I think it was Q1 where you're like, yeah, we're probably going to start to see Q3 of this year be a big barometer in terms of growth for these MSOs. And I mean, we got Q3, at least half of Q3 last week from a lot of the tier ones. What'd you think out of the prints? Anything surprising?
Yeah, I wouldn't say it was maybe the strength of the free cash flow generation that did come has been a little bit on the upside. I mean, we talked to our tenants all the time and a lot of people in the industry. And so we saw the hard decisions that were being made Q1, Q2, leading into Q3. And those were rationalizing footprints, those were laying off people, really focusing on inventory. All of those are really, really hard things. And so we knew it would take time for that to work its way through the system. And we thought that Q3 would be that quarter where you'd see the fulsomeness of it. So you've probably had better work than we expected on inventory rationalization. You've
Yeah.
probably had deeper cuts on headcount than we had expected, which helped some of those gross margins as well. And so I'm actually very enthused to have seen the industry respond to a very difficult operating environment and focus
Yeah.
on the key financial metrics that'll not only allow them to survive, but will allow them to start to separate themselves from the rest of the industry.
Yeah, of course. Stability is what we keep echoing, and I think you're seeing a lot of it here in the last week, don't you think?
Yes, yes. I think some companies are going to be buoyed by new states growing their business, right? Now that Ohio legalized, we'll see how long it takes for that program to get up, and
Big
hopefully
announcement, right?
the
Yeah.
state politicians don't meddle with it too much. But that's certainly going to help some folks' growth rates. I think people heading into Maryland had some build up there, some expense build up, and now you're releasing the market forces in Maryland, and they're benefiting from some of that build up. I think PA could be another really nice unlock for a lot of companies as well. Now that
Yeah.
PA is virtually
PA is
surrounded by rec
it's
states,
everywhere
so
right now.
it's
Yeah.
everywhere, right? It's everywhere, but I
Yeah.
think Kentucky, like that little part. So,
Yeah.
so I think there's a lot of reason to be optimistic. And before, I think if we were having this conversation a year ago, somebody would have said, "Yeah, but can they survive to get there? Will they be able to live to fight that fight?" And I think what 23 has shown you is this industry has the mettle to do what they need to do to not just survive, but to position themselves to
Yeah.
win in the long term.
Anthony, your business model, it's more stability, as we've said, versus volatility. If we see rescheduling, how much growth and how much does it change your business overnight?
Yeah, well, overnight again, go back to the credit commentary. It improves the credit quality of the portfolio overnight, which is a real value driver because it improves that net present value of our cash flows and the quality of that. In terms of immediately, I don't think a lot immediately because I do believe and hope that our tenants and the operators in the industry will not look at that and say, wow, I have a pile of cash that I can now use to go do a land grab or do a bunch of cash M&A. I don't
Yeah.
actually foresee that. I foresee people focusing on the balance sheet repair when necessary.
Yeah, I
Maybe there'll be
absolutely
a
do
little
too.
bit of right. Maybe there'll be a little bit of discounting because people feel buoyed and they want to buy a little share. Hopefully, we don't see too much of that. And so I think in the very near term, call it, you see that occur maybe in the next 6 to 12 months. Limited capex outside of getting ready maybe for an Ohio rec. Um, and so I don't think a lot near term, but I think long term, yes, you're going to see it's just another step in the federal legalization, which we know is transitioning sales from the illicit market to the legal market. And you're going to need more infrastructure in order to do that. And so long term, it absolutely I think is going to create demand for
Yeah.
real estate capex in the space.
Now, do you see the regulatory shift making that kind of like the inflection point to get more aggressive in like your deployment of capital across the board, or is it more so you're looking into like market structure, like adult use conversions, new markets coming online, as per I guess this overall capital allocation strategy?
Yeah, like most things in the cannabis industry, it really comes down to a state by state analysis.
Yeah,
And so we spend a lot of time understanding the details of an Ohio, of a Pennsylvania, of an Illinois or a Massachusetts, all different states that we're in, to understand what are the pricing dynamics, what are the demand dynamics, and where will pricing go in the future? Because it's not just about being able to close a deal and get rent today. It's
yeah.
about making sure we're doing business with operators that can react to the evolving market forces and withstand pricing compression, because inevitably there will be more pricing compression as
Yeah.
this industry scales and as more competition comes in.
Yeah, I could see that. So I guess it comes down to the growth states, right? And new states that come to market. That's going to be key. But, that stat last week of Ohio becoming the 24th state, what was that again? Is that potentially a $4 billion market?
Something
I
around
saw
there.
2.5 billion
Yeah,
Was it
as
two and a half?
the largest estimate that I saw. I've seen one
yeah,
and a half to $2.5 billion. I mean, it's what, 12, 14 million people.
yeah.
It's a meaningful state. It's had
Yeah.
a pretty decent medical program. And there's been a lot of build out already in Ohio. When we look at what is the build out needed in order to scale up for a rec state, there is some additional build out, but it's
Yeah.
not, say, some other states where it was a really small medical program and there was very little build out. Excuse me, there was a lot of build out that was necessary for it. So you have to look at it on a state by state basis.
Yeah, it
Yeah.
was nice to see. It was nice to see the retail cap actually go from 5 to 8 with issue 2 passing. So I mean,
Yeah,
I'm
it'll
assuming
it'll really help
you'll
folks
see
there.
the
Right.
top operators that are currently have the portfolio of 5 spots. I mean, I'd be willing to bet that they all up it
Yeah.
Yep.
to 8 going into the adult use
Yep.
rollout.
And Kim outlining too that you could see a $6 billion market if adult use does pass in Florida. I asked her flat out, like, do you think
Massive.
this becomes the biggest cannabis market in the world? And she's like, she said
It
very
could be.
confidently,
It's
I
either going to be
do.
Florida. It's going to be Florida, California, New York. I mean, I don't. I mean, the road's opaque
Right.
as per Florida and New York. As we know, California is that 500-pound gorilla. But I mean, it's going to be either the three, just by
I think
I agree.
population dynamics.
I think with Florida, it's exciting because you can see the roadmap as to how to all like kind of roll out. Where California at the black market, and then just New York, the way it's been rolled out has been so. I don't
I
even
mean,
know where to start.
The thing with California is despite with regards to Glass House, there's no one either really there that's operating
I
that you can
know.
play with in the public markets. Like Florida, it's look at the OMU numbers, look at what the implications of adult use goes, and then look at what the free cash flow on these businesses can be on the back end of 280E. And I mean, anyone that's looking at this sector, that's enough to get excited about.
Yeah, agreed.
Seeing that catalyst coming down the pipe.
Agreed.
What else
Go
people,
ahead,
I was just
Anthony.
going to add, if I could, Chad, what we've actually seen in some of the more mature states,
Yeah.
one of the benefits of price compression, if the price compression makes it to the retail location, and you start to see those retail prices come down, we've actually seen it unlock some incremental retail demand and conversion from the illicit to the legal channel.
Yeah.
And so not
Why is
all
that?
price compression is bad. I think it's a price point where people say, I'm better off going to a dispensary and executing my purchases at a dispensary and
Yeah.
doing it in a legal channel where it's safer versus through my traditional channel. I mean, look at some of the sales. We don't have anything in Michigan, but we watch Michigan closely.
Yeah.
Look at the sales in Michigan as those prices have dropped out of the bottom, and you're starting to see a little bit of this in Massachusetts as well, where there was
Agreed.
significant wholesale price compression, but there was a lag between the price compression at the wholesale level in Massachusetts to the retail level, and you're starting to see that create in Massachusetts some additional retail sales. So it's a dynamic to keep an eye on, and it could be another growth driver for those operators that can operate at a lower and narrower wholesale price.
Florida price points for flower is pretty cheap, as far as the
Right.
mid to value brands. I mean, yeah, you can get an eighth from Sunnyside, from Trulieve, from Air. less than $30. Which, I mean, you can't black market. It's probably $50.
Yeah.
I haven't bought black market cannabis in a long time, but I'm sure it's still probably 50 or $60 an eighth, depending on who you're buying it from.
Yeah.
Right.
That's the thing is I think you're seeing the involvement, the industry is evolving, where it was today versus say 2 years ago. Like, yes, the black market was sophisticated, but you know, you make a good point, Anthony. Like, where are you getting the product? Where is it from? We actually were speaking to a couple people, what was it, 2 weeks ago? One of the executives of one of the publicly traded companies, one of the big MSOs, they were in New York, went into an illegal dispensary. It was raided 30 minutes prior, and the owner actually came out and said, "Hold on, I've got product for you." Ran out back, and he came out front with a bunch of product in a garbage bag. And
Yeah,
that's probably
it's
happening at
incredible.
a lot of places
It's
right
incredible.
now.
Yeah.
And I have lots of friends. Uh-huh. I'm based in Connecticut, and lots of friends that I know in the New York area who think a lot of these locations are legal, and so they're buying product, and the
Oh yeah.
labels look similar to a legal product, and they're not in the industry to know the labeling different. Just looks professional in this store. They know it's legal in New York, so they think it's all legal product. Could
Yeah.
be mislabeled. It could be a perfectly labeled product that's been shipped, but there's no way to know. And I think part of getting the illicit stores or getting traffic away from illicit stores to the legal stores is one access. We just need a lot more of them. You need a lot more of the legal stores, but it's also, I think, the signage in New York City. Whenever you go around, there's usually signs that people put in the window that could say this is a legal cannabis store. And so as you get more and more education of people for what is a legal store and what is an illegal store, I think you're going to start to see that shift, but it's going to take a long time because you need a lot more legal locations, and they're just way too slow on the rollout.
Yeah.
I was talking to somebody the other day, and they were like, "Oh, I got these THC 0 and Delta 8 THC products." I'm like, they're great. I didn't know I could actually buy cannabis online. I'm like, you're not buying cannabis online. I have to tell you,
Yeah.
it's far from anything that resembles actual cannabis. They're like, "Oh,
Yeah.
but it gets me high. Like, it's great. I can get it easily accessible." I'm like, okay, like, to each their own. Like, if that's what you want to purchase, just know that if you research into that, that is not cannabis. It is the farthest thing from it.
Before we let you go, a reminder to our audience: you've worked 30 plus years on Wall Street with JP Morgan and a few other firms as well. Like, some of the biggest MSOs are currently working with you. And I do want to outline that in the cannabis sector, there's a very few companies that repurchase shares of their own stock. You've also allocated capital for additional buybacks in 2024, which is extremely important. So how has the share repurchase program resulted in the acquisition? I think it was over 700,000 shares in the open market, and contributed to the overall shareholder value, because this is important for people to listen to.
Yeah, thank you for asking the question. We at NewLake, we're all about creating value for shareholders. We could have all these conversations, but what we're really here for is to create value for shareholders. We are a dividend-oriented stock. We've been paying dividends since the inception of the company. We've been able to maintain our dividend this year at 39 cents a share. I said it was 47 cents a share for our AFFO. That's an 82% payout ratio with a nice cushion there. But yeah, on the share buyback, our view is if investors are not going to value the portfolio at the level that we think is appropriate, then we're going to take advantage of creating value. And so in executing that over $9 million of repurchases this year, we've generated over 3% accretion to our book value and to our AFFO. And so really not just buying it back because we believe in it, but really creating value through those buybacks and being able to buy it back so cheaply. And we've also re-upped it. We've added another $10 million in another year. And so we're going to continue to buy back stock and create value for shareholders if the market won't value the portfolio the way we think it should be valued.
What do you think, though, this says about your company and I guess the overall health of what you think the overall industry is trending towards going into 2024?
Yeah, I think it's a confluence of where the rate environment is. I mean, you look at a world where you were touching 5% on the 10-year, and the 2-year is now, as we're talking, 2 is now up over 5% again. I think investors are looking at yield-oriented plays and saying, what's the premium that I need for a cannabis-oriented REIT to buy those cash flows versus risk-free U.S. Treasuries? And I think over the last year, it's been tough to tell that story because while we believe it, we're in it every day with few
Yeah.
catalysts for true legalization. Outside investors just would rather say, I'll sit on the sidelines and I'll
Yeah.
wait for some of those catalysts to actually occur versus trying to time this to get in. And so that's fine. It's a continued education that we're going to be out there talking to investors. We've seen a lot of retail investors come into the name this year. Hopefully they're enjoying the dividend yield that they're getting off the investment that they've made, and we'll continue to hammer away at the institutional investors.
Yeah, for sure. I still think that if we get rescheduling, and you guys can correct me if I'm wrong, I think this will be a rally driven by retail again. You'll see yet another pullback, but eventually institutions, once they start to see does SAFE come into play, that's going to take another 12 to 18 months. But after that pullback is done, I think within the next 3-6 months, that's when you start to see the institutions come in and have a more structured plan in place as to what the trajectory looks like scaling out over the next year or two. But I don't see them jumping in overnight, even with the rescheduling announcement. Do you?
No, I agree. And also, we have to remember that the rescheduling announcement, let's just say that DEA says we're gonna recommend 3 or we're going
Right.
to implement 3. None of us really know how that's going to play out, but I think most of us expect that there will be hearings and lawsuits. And so it's not going to be done until it's ultimately done. So, yeah, there will be some movement after the announcement. And then I think people will have to take a step back and really understand how it's going to play out. And for all those reasons, I think you're absolutely right. I think the institutions say, I'll spend more time, I'll do more research, but I'm going to want a little bit more certainty, especially, again, we have to understand this is also in the world of other investment opportunities. And so if there's volatility and dislocation elsewhere, institutional dollars will go to pursue those near-term investment opportunities, and they'll continue to pay attention. But it's going to take a little bit more certainty, I think, for those gains to be long-lasting.
Yeah, I mean, I think if they announce Schedule 3 tomorrow, 12 to 18 months from now, you've got institutions coming in.
Yeah.
Because that's when everything's going to actually be implemented. Because remember, like, institutions aren't in because they can't take custody of the stock. Their compliance departments can't get around the red tape. The compliance departments can't get around that red tape until there is ink on paper and the actual clearing agents and everybody can actually hold the paper in their positions. I firmly believe we're a year and a half after they say Schedule 3 is happening.
Yeah.
If Schedule 3 is even enough to get the institutions off the sideline from a custody perspective.
Yep.
Yeah.
100%.
Yeah. I think that's a really good point, though. When you factor in ink to paper, like, it's got to be signed and basically signed off and confirmed. There's no like a biotech analyst or somebody that's, working for a big pharma company that's giving reports. They've waited their whole life for these types of jobs, and there's a million people behind, them for that particular specific job. They can't take chances. It has to be 100% confirmed. And as much as retail investors want to feel that are following this space, that the early bird gets the worm and institutions will come in, it's just a matter of like managing expectations and realizing what the timeline looks like, right?
That's right. I agree with that. And quite frankly, when I look at some of our larger investors, what they say is they like to go into a yield-oriented investment in the sector where they could get paid a dividend while they wait for that catalyst. And so different than, say, somebody that doesn't pay a dividend where you're just hoping you're not going to take dilution and you're waiting and waiting. We're paying out a dividend, you get a nice return, and then you get that bump from the catalyst when it actually happens.
Yeah. Always great talking with you. Appreciate it. We're actually in New York this week. We're going to try hard to obviously see you this week, but hopefully we run into each other. But most importantly, congrats obviously on the latest numbers, and thanks for the insight on, what you think, what you're hearing from your tenants. That includes some of the tier 1 MSOs and what we can anticipate trending wise and what you're hearing with regards to the industry heading into the new year. But this is all helpful.
Thanks so much for having me, guys. Always love talking to you. It's always a fun conversation.
It's good catching up.
Appreciate it. Hey everyone, thanks for watching. We appreciate all your feedback. So if you want to leave some comments, let us know what you think and what you want to learn of. Subscribe to our channel by clicking here. If you want to see more videos like this, then click here, because at the end of the day, we would not be here without you. Thanks for watching, everyone.